What is Tesla worth? If you were willing to sell it at $300 or $400 and you're buying it now, what is it worth in 5 years?
2000. We're in print on that. This reminds me very much of 2018-19. We're in a bit of a trading range, and we will be until more and more analysts, investors understand how provocative the convergence of these three technologies is going to be.
My favorite Buffett quote of all time has to be greedy when others are fearful and fearful when others are greedy. And Cathie Wood is doing just that. She and her ARK investment fund are buying Tesla like wildfire, despite the fact that Tesla is officially the worst performing stock in the S&P 500 this year. However, Tesla announced earnings on Tuesday, and it seems like it might be in the midst of its biggest pivot ever. The stock is down 40%, but recently popped after their Q1 earnings. This pop happened most likely because investors like the story Elon told. This kind of smells like an opportunity. In the past, Cathie and her ARK investment fund have received a lot of heat for their outlandish predictions, even going so far to say that Bitcoin will be worth $3.8 million a coin by 2030. So, to make sure we're not just buying a narrative, we'll dive into Tesla's actual numbers to see what the company has going for it. And make no mistake about it, there are a lot of interesting things going on at Tesla right now. From their semi-truck to a revamped Roadster, or perhaps a new affordable Model 2, or even a new crossover project called Project Redwood, to even some of their non-automotive innovations, including becoming a robotaxi company, Tesla Solar, or even an insurance company. And the biggest one that bulls are excited for is the robotics project, Optimus. But we have to measure this against a big thing that Elon is known for: talking things up without delivering. That is, until he does, but it's usually years after his original prediction. So, we'll separate the chaff from the wheat and take a sober look at the business and financial health of Tesla to try to figure out where the business is heading. These are the first two steps in Flank's approach to investing. Without anchoring a basic understanding of the business today and its financial health, you can't really start a conversation on where the company is going. Full disclosure up front, I am a Tesla shareholder in my non-public holdings and have been since 2016. And yes, I was an early user of Robinhood, but I literally closed my portfolio the day they halted trading on GameStop, despite having no dog in that fight. And that's because it became clear to me that Robinhood cared more about Citadel's Ken Griffin than the individual investors it was purportedly trying to help. But anyway, since I bought in 2016, Tesla is obviously one of the best performing stocks I've ever bought. I also drive a Tesla, and I absolutely love that vehicle. If it's your first time here, welcome. Although my Tesla position is outside of my public portfolio, I do have a public portfolio where I'm actively investing $100,000 of my own money. I currently have two positions representing about 40% of the total fund, with 30% or $30,000 in Lululemon and 10% or $10,000 in Disney. Both have performed pretty well, especially Lululemon, which is up about 8% at the time of this recording. I only took that position last week, and so I want to be clear about one thing. That was complete luck. It is completely random that that stock went up in such a short term. It is impossible to predict the market in the short run. There's just as likely of a chance that Lululemon would have moved against me as much as it did that it moved with me. Although it absolutely is nice when the stock does move with you. Anyway, before we dive into Tesla, it's been a busy week in the markets. We kicked off earnings seasons last week with more than 14% of the S&P 500 reporting, and a majority reporting this week. Of the companies that have reported, 73% have beaten earnings expectations, according to FactSheet. Most of the banks reported good news last week. Goldman Sachs reported a nearly 30% in earnings boost, but the stock remained flat based on management forecasting. Bank of America also beat expectations, but the stock fell 3%, again off of weak forecasting. Speaking of banks, TikTok may need to hire bankers for a forced sale after a TikTok ban passed Congress 360 to 58 on Saturday. We made a video on how to profit off of a ban. In that video, we also cover the funding history of the company and why it's so sus. The biggest thing this earnings season is telling us is that fear is re-entering the market. And we should love that as investors. It gives us a chance to wait for our favorite companies to go on sale. Okay, back to Tesla. At the top of this video, we talked about how important it is to understand the business. I think that understanding the business today is vital before you start any follow-on discussions of what the business could do in the future. We log ourselves into Flank, check out Tesla's company. I really do think the best way to start the how do they make money portion is to go right to the source, to their annual report. So we follow the link through and we go to Tesla's investor relations page, filter for their annual report, and then pull out their most recent annual report, which came out in January. Then we hyperlink over to my favorite section of the annual report, Part 1, Item 1, Business. From there, we see that Tesla operates with two business segments, automotive and then energy generation and storage. Automotive covers the sale of their EVs, obviously, servicing costs, sale of used vehicles, paid superchargers, vehicle insurance, and retail merchandising. Fun thing, this segment also covers the sale of automotive regulatory credits. The second segment includes the sale of solar energy and energy storage products, all things related to solar. Then if we continue to scroll down, we can see that they go into a breakdown of every single one of these in really good detail. This is a great section to read. Let's continue on and see how these numbers actually break down. You can see here that there is no doubt, despite all the chest beating from Elon and the hype from Cathie Wood saying that this company is so much more than a car company, right now, if we look at the cash flows today, Tesla is absolutely, undoubtedly an automotive company. The majority of their business is the sale of EVs. It represents about 80% of their revenue. It's not robotics, it's not a solar company, hell, it's not even a charging infrastructure company as some bulls want to claim. This business is absolutely a car company today. To call it anything else is complete speculation bordering on gambling on an uncertain future. And you can lose the script really quick when you start playing the what if game. So how do we square this seemingly crazy prediction from Cathie Wood?
What is it worth in 5 years?
2000, we're in print on that.
All of this could come true, but there's just so much uncertainty in those predictions. And uncertainty is risk. If we take a look at their financial health, it's what you would expect from a Magnificent Seven company. Their revenue grew 18% in 2023, and their 5-year revenue growth is 35%. Because they've experienced so much growth, they've seen shaky net income through the years, only reporting $15 billion last year. Their balance sheet is actually pretty healthy despite the huge capital expenditures the company has had to make to bring their gigafactories online. And they currently have a book value of $62 billion, about a 40% increase from the year prior. If we go to their cash flow statement, we can see that the company does do a little bit of share buybacks, and they are cash flow positive. Okay, so the company is pretty financially healthy. That was a cursory overview, and if we were actually looking to take a position, we'd want to look a lot harder at that. Now that we understand the business today, let's talk about Cathie Wood's predictions to see what it would take to make them come true.
We don't think Tesla is a car company. It's a robot company. It's an energy storage company. It is an artificial intelligence company. And we think those technologies are converging. And that Tesla is the biggest AI project in the world.
It's evident from all the interviews as well as ARK's public documentation that they believe robotaxis and Optimus are the key drivers to Tesla's future success. She believes vehicle sales or margin compression isn't a huge deal because they want to build out the fleet of these robotaxis and then act as a marketplace, like an Airbnb or an Uber. This is interesting, but there is a ton of uncertainty. There are a couple of other things I'd like to see before even considering adding to my position of Tesla. The first thing we'll look at is who's at the helm of Tesla. This normally falls under step 4 of our 5-step Buffett style investing approach. And if you want to go further in depth, you can check out this video, which we cover how we assess management. And we all know who's at the helm of Tesla. It's Elon Musk. And he's not really the CEO that he was 5 years ago. Recently, he's been threatening to not build Tesla into the AI robotics leader that Cathie Wood and other bulls are expecting it to become unless he owns 25% of the company. He currently owns 20.5%, and he claims that this is so that he can be influential, but not so much that he can't be overturned. Nah, buddy, that's absolute utter bullshit. It's so he can make more money for himself. And threatening us as shareholders that if the big baby doesn't get his way, then he's gonna pack up his AI and robotics technology and move it out of Tesla is ridiculous. We shouldn't buy that. Make no mistake about it. If he does this, Tesla will crash. Unless they pivot, we're gonna see margin compression and we're gonna see valuations come down to that of a traditional automotive company. And that's way less than Tesla's current market cap. Today, Tesla is worth more than every US automaker combined. And this is because investors believe Tesla is capable of becoming more than an automotive company. Absolute power corrupts absolutely. Elon is already the richest person alive, and if he's still going back to shareholders while the company is in turmoil, it's clear that he is only in this for one person, himself. That, and measured against the fact that Elon is a part-time CEO at Tesla, makes me come to the conclusion that there is way too much risk with no pilot on the plane. For me to add to my position in Tesla, I'd need to see Elon either removed as CEO. There is a really wide bench at Tesla. This isn't as crazy as it sounds. Or at the very least, recommit to Tesla's mission of accelerating the world's transition to sustainable energy, not accelerate his pocketbook. What I'm trying to say here is that Tesla has a governance problem. It's clear, given his compensation package, which was struck down by a Delaware judge, albeit, in my opinion, unfairly, but it's clear that he has a board of yes men who are not interested in their fiduciary responsibility to shareholders. They should not tolerate him threatening the company like that. And so if the board of directors aren't gonna hold up their fiduciary responsibility to shareholders, then it's on us as shareholders. And that's a big thing of what Flank's trying to do. Our mission at Flank is to tangibly reduce the wealth gap by empowering individual investors and restoring stakeholder capitalism. We as the owners of the company should not tolerate this. Directionally, I like where the company is headed. I really like the fact that they reaffirmed their commitment to the Model 2. This will help stave off competition from BYD and make the dream of a robotaxi fleet more possible than ever. It's really hard to bet against Elon, and I'm not selling my shares of Tesla just yet, but I am an unhappy shareholder, nor am I shorting the stock. But as a Buffett-style investor, I care too much about the leader at the helm to increase my position in the company. I do not like our CEOs threatening us. Okay, that was a lot. That's all for this video. If you liked it, please like and subscribe. We'll catch you next time.